Did you know that some of the wealthiest individuals are legally paying less in taxes than you might on your next paycheck? Yes, I'm talking about the likes of Jeff Bezos, Elon Musk, and even the Oracle of Omaha, Warren Buffett. It's not magic, but it sure feels like it. In today's video, we're taking a look at how these super rich people avoid paying taxes. This is not something that you want to miss. When it comes to taxes, most of the wealthy have mastered the art of playing by the rules, but still take advantage of every single loophole to make sure that they keep more money in their pockets. Let's go over the first set of many maneuvers they use, and we'll see if any of these can be used by ordinary, normal folks like us. First, we'll start with the capital gains and loss plus tax-efficient investments. Wealthy folks strategically time the selling of assets to make the most of capital gains when the market is booming. On the flip side, they offset these gains by cleverly embracing losses. That's right, they're not afraid of losses. They do this in order to reduce their tax obligations. The rich and wealthy have also learned to allocate funds to investments that give them tax benefits like municipal bonds or tax-efficient mutual funds. These financial attractions provide a smoother ride through the whole tax paradise, and more importantly, ensures that more of their money stays in the enjoyment zone and less in the tax queue of Uncle Sam. Expenses and write-off plus business structure optimization. Business owners are always meticulously tracking every expense to find more potential tax deductions. From office supplies to business trips, the rich and wealthy are not exempt. But the thing is, they have mastered this concept, converting ordinary costs into big deductions, and I mean big deductions. I'm sure you've seen those videos of people on TikTok talking about buying private jets and making these big capital investments. Well, these folks take it to another level. Quick question. Do you know what it feels like to assemble a team of superheroes? Avengers! Assemble. I'm sure you as hell don't have that experience unless you happen to be Captain America. Well, I don't, but most business owners must know why it feels like choosing the right business structure is just as important. Wealthy individuals strategically pick structures that offer the most significant tax advantages. Whether it's an LLC, a multi-layer LLC, S corporation, or other formation, the focus is on creating a financial safe house and guarding against unnecessary tax problems as much as possible. Use of offshore accounts. I'm sure this isn't your first time hearing the term offshore. Offshore banking, offshore account, etc. What does it bring to mind? Water, seeds, and more water? Surprise, none of the above. Offshore banking is a bit like hiding money in distant places, islands. The wealthy stash their money in foreign banks, often in tax havens known for their friendly financial policies. It's like sending their hard-earned money to a safe place away from tax issues at home. Offshore accounts come with a little bit of tax legal implications and challenges. However, so before you start dreaming of stashing all of your money at that private island, consider what's involved here, right? The tax authorities back home always keep a watchful eyes, and there's always a need for carefulness. Governments everywhere are tightening regulations to prevent abuse, so you need to ensure you're in line with both domestic and foreign tax laws. How else do the rich avoid paying taxes? Well, tax credits and incentives. Think of charitable contribution as the Robin Hood move of the rich. When the wealthy open their wallet for good cause, the taxman gives them a nod of approval. But is it just a strategy for them to reduce their tax burdens, or are they actually being kind? It's probably a little bit of both. So how does this work? Thing is, the more the wealthy gives to charity, the less they owe the taxman. Generosity meets financial strategy, and it's a win-win situation for everyone involved. Research and development credit is another way the rich avoid taxes. Have you ever heard the phrase, innovation pays off? Well, for the wealthy, it's not just a saying, it's a tax strategy. Research and development credits are big money savers for those investing in groundbreaking ideas. Whether it's inventing an exciting one, the taxman rewards the innovation with a reduced tax bill. There is a green side of tax benefit and renewable energy investments too. And investing in renewable energy isn't just about saving the planet for the rich. Governments around the globe encourages clean energy initiatives, and the rich knows how to ride that green wave. From solar panels to wind farms, each eco-friendly investment is a ticket to a little bit of a last of a tax bill. Business deductions are not left out. The rich love maximizing their business deductions. Everything allowable, they're gonna make sure that they get on that tax form. From office supplies to business trips, these rich guys turn each cost strategically into a deduction, reducing taxable income. It's a sophisticated game that the rich play to keep more of their wealth. Controversial practices. The rich often exploit the boundaries of the tax code in order to save themselves more money. This is referred to as corporate loopholes. They usually do this through 4 means: transfer pricing, income shifting, lobbying influence on tax policies, and making sure that they read the tax code. The term loophole Olympics is a real thing in the corporate tax world. One very popular event is transfer pricing. Imagine a global company juggling prices on goods and services between its branches. These strategic pricing moves allow them to shuffle profits to low tax jurisdictions, leaving the taxman with little to nothing. It's not illegal, however. It's just a clever twist in the tax world for people that knows about it. Income shifting is like passing the tax burden between different entities within a corporate family. By strategically moving income to entities in lower tax regions, the rich use this controversial tactic to cleverly blur the line between clever tax planning and exploiting the system. Lobbying influences on tax policies. They influence tax policies to favor their interests. It's not necessarily evil, but it does raise eyebrows. By molding tax laws, these guys create a playing field where they have a certain advantage over others. Hey, before we go ahead, do me a quick favor, will you? Hit the like and subscribe button. This is so that you do not miss out on future updates that can save you moolah and moolah of tax dollars. Done? Alright, let's see what's next in stock for us. So, we witnessed some recent high-profile cases of these wealthy people making the headlines for their tax strategies. The Oracle Omaha Warren Buffett once famously disclosed that he pays a lower tax rate than his secretary. How? Well, most of Buffett's income comes from capital gains and dividend, which are taxed at a lower rate than ordinary income. Therefore, his secretary pays almost twice as much as he does in taxes. This revelation, of course, sparked some discussion about the fairness of the tax system and gave birth to the term Buffett rule, calling for higher taxes on the ultra-wealthy. Apple's tax strategy also attracted a lot of attention lately. The tech giant was accused of using Ireland as a tax haven, allowing it to shift profit and reduce its tax bill. The European Union ordered Apple to repay Ireland $13 billion in euros in back taxes, claiming it received illegal tax state aid. This case shed light on the complex world of multinational corporations leveraging global tax disparities. Amazon, one of the world's largest companies, is an example of this. It has faced scrutiny for their tax practices. Critics argue that the company exploits different tax credits and deductions, ultimately resulting in little federal income tax payment despite gigantic profits. While not specific to a single individual, the Panama Papers, leaked in 2016, exposed a vast network of offshore entities used politicians, celebrities, and business leaders to hide wealth and avoid taxes. The leak implicated numerous high-profile figures globally and led to increased call for transparency and regulations in financial systems. These instances have all contributed to exposing the issues and controversies surrounding the tax strategy of the wealthy. They also bring the ongoing discussion about fairness, loophole, and reforms to the forefront. So how about some ethical considerations? When it comes to ethical world of wealth and taxes, the question of morality looms large. Is tax avoidance a strategic gain or a moral gray area? What do you think? The wealthy often argues that they're playing within the rules, utilizing legal means to reduce their taxes. However, critics contend that such means, while legal, might destroy the societal trust in a fair tax system. This ongoing debate really sparks introspection on the morality of not just what is legal, but what is fair and just. So, this is the part I think you all want to know about. How can common people join the rich and taking advantage of the tax codes to reduce their tax burdens? Some of us might have yet to discover that common people can also take advantage of these acts like the rich and reduce their tax burdens. Let's see the story of Lisa, an ordinary individual who adopted tax-efficient practices to reduce her tax burden. Lisa was a middle-income earner and inspired by the wealthy, so Lisa did the following. She took advantage of controversial yet legal practices. She explored strategies like carrying forward capital losses to offset future gains, allowing them to minimize tax income legally. She also identified eligible tax credits and took advantage of these incentives for energy-efficient home improvements, education expenses, and renewable energy investments. Lastly, Lisa strategically optimized business expenses and write-off, exploring deductions for home office expenses and travel. Lisa's case study illustrates that within legal boundaries, individuals can also enjoy controversial practices, take advantage of tax credits, incentives, and optimize expenses and business structures. It remains to be seen if the government will act to close the tax gap between the upper class and the rest of the citizens, but till then, we waited for bated breath. However, reforms we made and the wealthy will contribute more to the tax wallet. In the meantime, don't think that you can't also take advantage of a lot of the tax credits and deductions available in the marketplace. You just have nowhere to look. Find yourself a tax professional, get some advice, and make sure you don't give away more money than you have to. If you enjoy watching this video or would like to see similar videos, the best way is always stay updated by subscribing to my channel and smash that thumbs up button so you don't miss out on any of our content. Again, thanks so much for watching, and we can't wait to see you next time. Alan out.